know if I was bribed or I was extorted. It was like, it might have been a bit of both, really.
Is this like a new idea where if you're not returning the value back to apps or back to the users through the apps that you're not going to get traction? Like, is this a new idea?
There's so many different ways for someone to enter the system, so many different angles to attack it from.
You could effectively incentivize emissions to a pool too, with the LP token of another pool.
Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Redstone modular oracles are available on 50 plus chains, trusted by over 100 clients and over 6 billion in total value secured. Visit redstone.finance to find out more.
All right, Smokey, we are in Denver, ETH Denver.
Hell yeah.
The chain's real now?
Chain's real, fuck.
The first ETH Denver when the chain's real.
Incredible, man. It's, I'm still like expecting to show up to different events and just be like, what the fuck, man? Like, why'd you make it real?
Yeah.
Just, you know, see the smiles and the crying and et cetera, et cetera.
Yeah.
How's your Q5 overall?
I mean, hey, Q5's been like decent so far, man. I mean, I think that it's been kind of interesting to see the ecosystem just starting to take life. And there's the kind of interesting part about having built for as long as we did before, which is like we have both the I guess robustness of a pre-chain ecosystem that, like, you know, I think rivals some ones that have been live for a while, and the politics and the baggage that comes with it as well, which is quite interesting, right? And that, like, you know, tokens live, people have different opinions. Of course, people have opinions on who should get what or who shouldn't get what, et cetera, et cetera. And I think that what you get to see very quickly are the people who are very like long-term oriented and who are like, yeah, like we're riding or dying for this, or people who are like just there to kind of start shit and you know, catch a hype wave. So I think that has been another interesting thing to study, just from like a social dynamics point of view.
Yeah, I mean, you guys, well, the numbers don't lie. You guys passed Arbitrum, I believe, and I think other L2s in TVL.
Yeah.
3.8 billion?
3.5, 3.6. I don't like. I think some of the numbers are still lagging on DeFi Llama, but yeah, man, like the inflows have been great. You know, non-trivial portion that came from Boyko, but I believe that post-launch, still about $1 billion and change has come in. You know, sans that, and you know, under these market conditions, I'm like definitely not mad about that in the slightest. So we've just kind of been like running at full speed, doing our best to make sure that the application ecosystem continues thriving. And I think what's kind of cool is to see like some of these apps breaking into their own classes per se. Yeah. Like I didn't realize this until more recently, but dude, like Dolomite's a top 10 lending market by TVL right now. And I've been yelling all over Twitter about how they have better borrow rates on like majors than you actually get on Aave and Euler, et cetera, on mainnet, which I think is just really cool. Just like from a growth point of view. You know, the Kodiak guys and the Infrared guys are each, you know, sort of top 5 within their categories from just a TVL and actual usage perspective. So LSTs and DEXs respectively. And then we're just starting to see funky new stuff pop up more and more that I'm just excited to see rolling, right? Like the 𝗵𝗵𝗴𝗵 guys, Goldilocks doing some pretty interesting new stuff with yield swaps. The Berachain guys taking a new take on sort of, I guess, CDP protocols. I think we're starting to see the start of it. And then we're also getting to see, I think, some of the social layer stuff coming out. And those things that'll look a little bit like games then might actually have more intricate financial mechanisms. Yeah. So, I mean, like, it's like that slow Big Bang moment. In that I think the market itself has been a little bit like, you know, starved of oxygen. So while it's not like you know, 300 things happening at once, I think it's a lot more of a set of controlled small explosions that we like to see.
Yeah, and I think like the core premise here is this like symbiotic relationship between the apps and the chain itself.
Yeah.
And I think that is going to bring this like kind of flywheel, as you've already seen it in Bera and, you know, Bera and BGT, that we'll see that kind of. It reminds me of DeFi summer. Like, it reminds me like when like the yields there were so good on the first day, and like there were so many opportunities. But one thing that I'd kind of like to get your perspective on, and I'd like to talk about kind of like the entire ecosystem, but the pre-vault or the pre-deposit vaults there was some sort of like kind of confusion there, or kind of like different opportunity set than depositing on day one. What was
like the trade-off per se?
Yeah, what was a trade-off, and like what was your reflection, and would you recommend other builders to do pre-deposit vaults?
Yeah, I think that a lot of it is circumstantial, but also a lot of it is depending on what you're shooting for, right? I think that for us, basically the pre-deposit vaults versus depositing on mainnet sort of gave you a couple different sets of preferences. Depositing on mainnet right now is pretty vanilla in that like the only way that you earn BGT, and notably BGT, is by providing liquidity on the DEX, right? And as full POL rolls out in the very near future, i.e. the next couple of weeks, that's where we'll actually see, the ability to deposit into different third-party protocols, which are then approved by governance and have almost any action on the chain that results in a stakeable token actually being, a recipient of that BGT. The pre-deposit vaults, on the other hand, gave you, I'd say, a lot more specificity in terms of how you'd want your capital to be put to work. So not just farming or not just in the DEX, but might be single-sided LPs, might be used as collateral for a CDP, et cetera, might be deployed into sort of more, I'd say, actively managed vault protocols, et cetera. But you're getting rewarded in liquid Bera, right? And that goes one of two ways. It's like, okay, do you want to go long on the governance/emissions token of the system that actually sort of controls incentives and becomes, I'd say, more of a compounding force over time? Or do you want to have exposure to the liquid token in perhaps the more vanilla form, right? So I think it allows people to sort of choose their exposure. To answer the second part of your question is like, would I recommend it for people? I think net, yes, but I think it's also like it's a gift and a curse in that one could say, okay, well, would that take away from volumes that float into the chain, right? But at the same time, I think there ends up being a lot of theory crafting, which is to say, okay, if that volume didn't flow into the chain fast enough, would it scare off other volume, et cetera, right? Or if it flowed too fast, would that mean that you just have a massive pullback? You know what I mean? I think that right now, it strikes me as something that is net positive because on one hand, sometimes conversations start in the same way that you did of saying, hey, like you guys just passed Arbitrum and base, and that in itself can be a little bit of like a starting point and then the conversation becomes, okay, like what is this TVL doing and how are you actually getting the most value out of it? And that's the part of the equation that we're at now, which is to say, cool, how do we think about not having the blast/manta effect? How do we think about having that be more like, sticky and engraved over time? And enshrined. And that's actually what POL does, right? It's like, hey, these teams started by working with us on incentives and actually effectively having their deposits subsidized to some extent by the chain as part of that launch program. Well, the natural extension of that, our next step, is to find ways to use their own token incentives, et cetera, to keep that liquidity productive and living on the chain, right?
Because once POL starts, then the validators basically can choose the validators get to have this like game theory going on as well. So the really interesting thing here is that every participant is playing their own kind of game with their own beliefs and their own risk tolerances, right? So like validators can optimize to earn more Bera. They can optimize for BGT. They can optimize for Honey, for other tokens. If you're a user or an application, you can also kind of optimize for different like streams, and basically if you're more bullish on one thing or if you want to have less risk than others, you can kind of optimize your entire setup to have that. And that's this game theoretical component, I think, makes people who are active in DeFi summer like excited again. Like I think that's the niche that you've catered to well, that I think was really yearning for that experience.
Yeah, I think it was the founder of Atari that said, what makes a good game? It's one that's easy to play, but very difficult to master. And I think you guys have done that particularly well because there's so many different ways for someone to enter the system, so many different angles to attack it from, but to really, really master it is quite difficult because you have a lot of moving parts. And so that makes a very fun game.
Totally. I think like that was sort of the whole premise, right? It's, there was someone, I think, one of the guys from 𝗵𝗃 once wrote an article like maybe a year ago now, and he was calling it like a playground for infinite economic games. Yeah. And I was like, that's a pretty cool like tagline of sorts, right? And I think it's true because people can very much subscribe to their own, like you said, risk tolerances and outcomes. You can have a validator that chooses to basically only direct emissions and therefore receive incentives from like super low caps that are effectively venture bets, right? And say, cool, like we're going to take a bunch of floaters of these protocols that are at like $5-10 million market caps that have gotten, reward vaults, et cetera, and hope that they make it, right? And then if they do, they, benefit massively. If they don't, they flame out and they've only just gotten their baseline yields, right? On the other hand, you could have groups that operate a little bit more like ETFs that are focused on blue chips and say, hey, we're going to take all the, commissions or all of the incentives that we get and we're just going to convert it into Bera or ETH or Bitcoin or whatever that might be. And then you have other groups that might go like super low risk and be like, all we're going to do is take emissions and take incentives in the form of stable coins, right? And you can also sort of see this if you look across, different sort of like incentive or bribing type mechanisms across like DeFi. Most commonly just applied at like the DEX level, right? But you'll often see one of two things. Either people are taking incentives in the form of like USDC if they're just super risk off, or they're taking some wacky long tail shit that no one's heard about.
Pool 2 token.
Yeah, exactly.
100%.
Right? And then, I think that the funky thing is there's like so many degrees of freedom in terms of what one can do there. Like you could theoretically incentivize, you could effectively incentivize emissions to a pool 2. Yep. With the LP token of another pool. You know what I mean? Like you can do weird stacking shit if you want to. So I think it's kind of like Robbie was saying, right? Like you can choose to play your own game. And that's a gift and a curse in that on one hand, if that's too complex, people will be like, man, what the fuck are all these moving parts?
Like, turned off by it, right?
Yeah, like I'm gonna check the fuck out. Yeah. Right. And that's why I think a lot of the work that we have and a lot of the things that keep me up right now are basically just simplifying the product, making things more one click. So it's like, okay, cool. Like I have this token, I want to end up earning BGT. What is the simplest way for me to do that? And then I think also protocols in the chain are making that easier. Like Infrared is doing a great job of this. I think 𝗏𝗏 will do a great job of this. A lot of these like one-click type solutions, even groups that just like really focus on the UX, like Berachain, for example, which has built like both like a really good mobile app and just sort of a web app as well that shows all these like core components of the ecosystem, whether that be the swaps or the staking or some of the dApps I've mentioned, et cetera, where there's just more and more rolling out per day. And then there's also people who are building tools that are almost specifically intended to bring things into the Berachain ecosystem easily. Yeah. So like there's the Shogun guys who I'm sure you guys are familiar with, right? Like,
Just hanging out with them in Hong Kong. Those guys are fun.
Absolute lads.
BM, they're buying the BM meme coin.
They're pumping the BM meme coin, which I think is fucking hilarious.
Yeah. But their product, like they're making it easy to go from EVM, Solana, anything to Bera, right?
And that's what I think is awesome, right?
And even memeing like the Kaido airdrop, one of them posted like, oh, okay, this is easy. Yeah. Swap from Kaido straight to Bera, like right. Shit like that.
Yeah, and like I think that like having those easy inflows and those like, okay, this is not a hassle for me to get my tokens over here is really nice. I even think about that from a bridging point of view. It's been great working with the Layer Zero guys, et cetera. I think in general, we've just been fortunate to have like a bunch of partners that are making our lives easier.
Influx, I saw, supported you guys. I don't know if you bought a Patreon, if that's what was the bribe was. Kane's just bribing everybody.
Bro, I don't know if I was bribed or I was extorted. It was like, it might have been a bit of both, really. But we really like those guys. Yeah. And I think I think Kane is one of the few operators I've met who I can understand and could see cutting it in both Web 2 and Web 3, and has obviously built something massive with synthetics before, and I think understands, like, I thought Kane was going to be more of a Fed before I met him, and then I met him, I'm like, oh, this guy, like, is down for some clownery, for sure. And I think that this probably also brings back a little bit of the DeFi summer stuff that he, grew up on, right, without putting words in his mouth. But yeah, I think that's started a great partnership between these teams, and I think in general, improvements to UX will be, outsizedly valuable for us because there's already more elements on the table to start. So the burden to sort of like understand
education and UX,
exactly, right. So,
but I think what you guys have going for you is this. Again, it comes back to this symbiotic relationship at the social layer, and I'm curious how you've seen this play out, right? Where like because the apps on the network and the validators and the chain, while the apps are still going to be competitive by nature for flows, for liquidity, for mindshare, it does seem like there's this baked in kind of more team kind of like this kind of like social layer collaborative feel. Like maybe like what's that been like so far since mainnet? Like how has your technical design created a better community?
Yeah, it's a good question, man. I think we'll ultimately get to see this in the next couple of weeks with POL because I think that's when like the real games begin per se. I think that to date, it's just meant that there's a lot of people, talking to each other about how they can actually stack up and find ways to effectively be greater than the sum of their parts when POL does go on. Yep. So figuring out, okay, like how can we have Protocol A's reward vault also pushing emissions.
So is there like little cliques forming? Like
I think there's
little,
definitely
camps and clans and shit.
I think there's definitely like there's always like subgroups within an ecosystem. I don't think we've got to Cabal stage yet because I think like we need I think you just need more in general to have actual Cabals. But I think that we've got you can see that for example like the Yeet guys and the Baradrome guys and the Kodiak guys have like their liquidity trifecta program and whatnot, right? And I'm sure that we'll see a bunch of people doing like funky like levered looping stuff with Dolomite. Definitely. right? We're seeing the Berachain guys forming more of their own flywheels. We're seeing the guys who are coming from other ecosystems like Concrete and Lombard, et cetera, get more stuck in the Stake Zone team, et cetera. So like, I think that that's actually perhaps the most interesting point, which is to see how the ecosystem is receptive to or not to outsiders, if you will. And there's, a couple of, big entrants to the ecosystem that I can't quite disclose as of yet, but I'm hoping to be able to disclose on Wednesday. That I hope will be well received, and we want to make sure there's like people around the project who can help like make it Lindy within the Berachain eco, because I think the gift and the curse of a community like ours is that they're like a little bit tribal by nature, and that's great because like tribes stick together, but tribes can also reject people from outside worlds, right? So it's almost about being able to lean on the folks who I think curry the most social favor per se at times, and be like, yo, like, this is net value created for all of us. If there is this, source of inflow for stablecoins or a source of inflow for differentiated Bitcoin liquidity or whatever it might be, because from there you can really say, okay, like, here's how this helps your bags and the collective, if you will, right? So I think so far we've seen the teams like all working together and being very supportive of each other, even like sort of just like cross-chain cultural groups to some extent. Like the 𝗁𝗲𝘂𝗋𝗃 did like a mint on Bera that sold out recently. And like we think those guys are great and like very emblematic of like crypto native culture, and also have like some pretty cool arts, like, 𝗵𝗶𝗴𝗵 over there. And then I think that we've also seen lots of teams supporting like different public launches on like token launch pads on Bera, like Ramen. So there's been at least 3 or 4 different groups that have, had successful launches there, and all have their tokens trading in like low mid 8 figures and just doing their thing.
Sweet.
The pre-deposit vaults were one really great example of something that, other founders and projects can learn from and look at that are looking to go live. What other advice would you have to those in a similar position, pre-token, pre-chain, ultimately, going live, any advice or lessons to be learned?
Yeah. Good question, man. I think that like no matter how meditated or how thought out the plans are, something always is fucked. For example, for us, the morning of, we had like private safe instances, right? Because as different teams were getting set up with those pre-deposit vaults, they needed to deploy their contracts before the chain was public, and we were basically migrating the website or the UI. I forget exactly what it was now, from one domain to another, and it just didn't work. As they were migrating it, it just like froze, and basically our RPCs are not working, and we could not access Safe, which was quite problematic because we had a bunch of funds in Safe that we needed to use to fund the airdrop. So for like the hour and a half before, we're scrambling like on the call with their teams, et cetera, being like, okay, can we try this? Can we try that? It's always a shit show to some extent, and perhaps more so in our case than others. But I also think that the launch went like relatively smoothly, all things considered. Definitely, work to be done. I think to actually answer your question, one thing is that I'd say that making sure that you have clear comms around like what the intent or what the breakdown of the airdrop is for, and what that really turns into is important, and doing as much education as possible in the public sphere. I think that, people didn't like, I don't think that we did a good enough job of explaining like what the different portions were meant to do. I also think that with any large launch, you have a bunch of angry testnet users. Sure. Like I think that's just like unavoidable. But I also look back at it and I'm like, we can actually very cleanly and conscionably say that the vast majority of this airdrop went towards builders, users, targeted, experienced members of the ecosystem, as opposed to people who are just trying to extract value. Yeah, and of course, there's people who are trying to extract value within that group, but they're there, right? I think that other things that make sense is I think that especially early, it can be very easy for both the team and like us as founders to spend time watching the charts, and like I was saying as we got in here, right? There's a gift and a curse to that, in that on one hand, if you're building an ecosystem, there is some degree of responsibility there, because if your ecosystem dips too hard, like as in the token, if you will, then that can also just be something that holds back everything else for all the beta, if you will, or all the projects launching on the chain. But if you spend your time watching the charts and ultimately doing things that you can't control, like, it's unproductive. Yeah. So I think there's a matter of like separation of church and state, where you have to be able to like sort of zoom out, pull yourself away, and be like, okay, like, this is going to go up and this is going to go down. I'm going to do my job and look in on this as needed, and focus on the fundamentals. And then I think that a very, very important thing that we're just honing in on to the degree that I would like, and often even has like, conflicting viewpoints within a team, is figuring out what matters. As in like, what are the metrics that are important for you as a chain? Yeah. and why, like, where do they need to be, perhaps from a benchmarking point of view, and what needs to be done to get them there, and really what are they, right? Because some stuff is a little bit, trickier to measure in terms of like net promoter score or like mind share. Like, yes, you can do Kaido and or cookie analysis, et cetera, but it's by no means a precise science. Yeah. But the question is, okay, do you care about app layer revenue? Do you care about the percent of your token that is staked? Do you care about the percent of your airdrop, that's sold? Like, what are the things that determine success? And then how do you work backwards from that? Because otherwise, I think that it's very easy to be moving in like 5 different directions at once and actually not advancing anything. So that's like where we are right now.
Yeah. I think that is the right way to think about it. Is you think about, okay, what does success look like? And that inverts it. Then by working backwards, you can say, okay, picture that reality. What are the steps that, have to precede that? And those are easier to accomplish. So, obviously there's a lot of factors, but, what is that North Star? What is that success criteria?
Yeah, for sure, man.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yield on institutional grade liquid staking with 𝗵𝗶𝗶𝗵. Unlock $1 trillion of capital via 𝗵𝗶𝗶𝗵. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Berachain is basically the first L1 that has a token in the form of BGT that actually has value flowing to it from the application layer, right? That application layer validator BGT interplay is incredibly important. So on one hand, a very meaningful and valuable metric for us is the amount of incentives or value being passed back to BGT holders, because at the end of the day, that's actually value that's going back to the ecosystem as a whole, and it's instead of this inflation just fleeing the eco, if you will, there's almost an offset, right? So I think that's quite interesting because it actually gives people a reason to have BGT beyond just the governance power. Another one is really, I think a lot about a classic Valley term of like narrative violations. And this is what like 𝗵𝗵𝗏𝗏 will just, yell a bunch of times without much context. But like there's actually importance in that I think post token being live, your fate almost, I think has a greater impact or is more impacted by headlines and things that people would not necessarily expect, whether they be entirely nuanced or not, right? But for us as Berachain, I don't think a lot of people expect things that are more traditional or corporate in nature. In many cases, they expect the degen DeFi paradise, right? So actually, I think that being able to say, hey, like there's this thing coming up that one would not expect. For example, like if you realize that Berachain actually has either I think at this point the highest, it might be like 5 million off or something, but the highest amount of PayPal USD on it, apart from Solana, or like it's basically just past Solana, the only original source on ETH mainnet. But basically, like we are becoming the home of PYUSD quite quickly, and we actually think there's like a massive, I'd say Web 2.5 / deeper integration, e-commerce, et cetera, set of rails that can help power that people don't think about right now.
Total narrative violation,
right? Because like you don't think PayPal and bears, like
I think another one is the amount of institutional basically farmers and investors that you guys either have now or I listened to the pod with Vance and Mike, and I'm sure Vance is heavily involved on chain now with his team, and other investors are, and then soon more will be. And so I think while the narrative violation of this DeFi degen on chain retail kind of crowd, but I would imagine throughout this year becomes also highly institutional oriented.
100%. Like we've been in touch or have been reached out to by different firms, including the groups that are largest borrowers of ETH on Aave, et cetera, who are in many cases managing treasuries or institutional earn programs for other centralized exchanges, hedge funds, institutions in general. And they're seeing the opportunities on the horizon, right? So I think that being able to lean into those narrative violations a bit is interesting. It's okay, don't lose the spirit, don't sell out, don't go corporate, because I think that would be pretty lame. But also every now and then pop up with something that people are not expecting. At the same time, I think a lot about narrative affirmations, which is to say at the end of the day, if we also didn't have cool DeFi shit, people would be like, the fuck's going on, right? So we got to do that as well. I think a lot about the fundamentals in terms of app layer revenue, right? It's how are the apps on the chain sustainable? Are they paying for their own bills per se? And there's a lot of different really good examples of that, whether that be the fees on Kodiak, or for example, 𝗵𝗶𝗶𝗃, when the basically the go-to aggregator in the ecosystem has done 250 mil of volume. I think they had done like 100K in fees within the first couple of days. Right. So like those are very much like ramping. Dolomite, I believe, is at one point or is on rate to basically be able to, fund a full year's runway just based on their Bera borrowing like fees. Like, so a lot of these things are trending quite well directionally from a sustainability point of view. And then I think a lot about like what actually end up being the points that pull people into an ecosystem, right? You need breakout dApps. You need those things that become ubiquitous or become cycle defining. I think recently those have fallen into one of two categories. One is sort of just like your token launchers with funky spins on them. So virtuals on base and pump, right? And like, I don't know if that's where the puck continues going. I think there's value there for sure. And like everyone is short attention span, just wants lottery tickets, etc. But I also feel like more and more capital has been burned by that and is less likely to play those games.
Yeah, I agree.
The other is sort of like, stuff that's a little bit more like eggs on Sonic, for example, or like, games that effectively have a game theoretically optimal way of engaging with them, might have interesting financial value, but sort of rely on the fact that there will be one group of users that educates themselves more and plays that game more optimally than the other, and then sort of spirals a little bit, right? Now, I don't always think that these end up being like net value accretive or net positive for the ecosystem in the short term, but I do believe that if they draw enough people in and, enough other things keep them there, then they can be bullish.
Yeah. And I think like the key thing about eggs and Sonic, for example, is that Berachain and Sonic are currently, I'm pretty sure this is 100% accurate, the only chains that are driving value from the fees generated or from the applications right back to the apps themselves, and then giving that back to the users in some capacity. Sonic's obviously different.
Yeah.
Just goes back to the apps, and then they can kind of choose what to do with it. And I think like Sonic's kind of getting a lot of mindshare now because of that.
For sure.
Bera is as well. Do you think that these are like trend-defining ideas that will basically persist into kind of in a similar way where, now if your L1's not cheap and fast, it's basically like no one's going to use it.
Yeah.
Is this like a new idea where if you're not returning the value back to apps or back to the users through the apps that you're not going to get traction? Like, is this a new idea?
I think it's almost just like an obvious thing that's become like more
like
and more
iteration, right?
Yeah. It's like just over time we've seen more people leaning into it. Like way back, and I think like if I recall correctly, I could totally be wrong here. I think Sonic is using like a version of like CSR, like something similar to what Kanto had way back, and the whole idea was like gas fees and like effectively fees are just like going back to apps, which makes sense. Like right, like it can be gamed to some extent, where it's like the biggest gas guzzlers per se might have an outweighed effect there. But I think the whole idea of like you have to allow the application layer to thrive. Otherwise, everything else loses. Is becoming more and more ubiquitous. And I think that we'll start seeing people trend towards that at like the protocol level over time, right? I think that like we'll see that with other launches like, Initia, they've got like a sort of a version of almost like KPI proof of liquidity of sorts, right? We call it, like Fed chain proof of liquidity, and like they're homies. And I think it's kind of cool.
It's funny because Zahn was in here about a couple hours ago and he said crime is legal.
Yeah, well, dude, like, when the fight, like,
No, he said it's illegal. He said it's illegal.
He said the community wants him to do crime and he has to say no.
Yeah, everyone wants us to do crime, bro. Like, everyone's like, whatever you must do to make I'm like, bro, I can't.
Yeah.
No.
You gotta relax there.
But like, I do think that I think that we'll see more and more trends towards value capture at the application and user level as opposed to at the infrastructure level.
So then what does that mean for L1 valuation premium going forward, right? Because I think a lot of people thought you guys would launch way higher. Not that you guys should have or could have or what, like what happened, right? But like, what does this trend towards applications accruing more value mean then for like L1 or base layer valuations? Do you think they start to become more on par, or are we still just far out from that?
I mean, I think I'm still a believer in the L1 trade, though I'm probably a little bit biased for perhaps somewhat obvious reasons. But I do think that we probably see the gap start to close a little bit. And I think we see power laws become more and more evident. And that I think like in the same way that many ecosystems are boiling down to like 2 or 3 dApps and then a bunch of random shit, I think that becomes closer. And I think that the ratio between the actual, like, let's say the actual L1 token or L2 token for that matter, and its leading dApps probably closes quite a bit, right? Like, I don't think like the Arbitrum GMX or the Arbitrum like Camelot gap, I think that would not exist in a newly launched chain, if that makes sense, right? From a token value point of view. So I think that one is going to be pretty interesting to track. I don't think it takes away from the L1 though, because I don't think most L1s are valued based on what is even the word, because they don't by nature capture value. No. In most cases, L1s are just giving that value to the stakers. Right. And the stakers are not necessarily always like that incentivized to do much but dump it either. Right, yeah. So I think it actually might end up being more value accretive to those L1s in the long term. But you know, that's a lot of crystal balling.
Is your competition in your mind, is Arbitrum even like part of your competition?
I mean,
like they're like the L2 for DeFi, like they've been like, you know, they have deep liquidity, et cetera.
I mean, I have respect for Arbitrum, and I think that a lot of the builders that we interact with or work with have sort of like cut their teeth there in different ways in the past. But I also do feel like the excitement has died down there a lot. And as of recent days, like, you know, I think that there was a proposal to deploy their treasury or some part of foundation resources, and that was actually deployed all into like stuff on ETH mainnet.
Yeah, basically.
As opposed to ARB.
The community wasn't very happy about that.
Yeah, like, you know, tricky look, right?
Interesting.
So I don't know. I think.
So do you have any competition? Does Berachain have competition?
I unironically think the competition is probably Solana, ETH based to some extent. Okay. I think those are the ones I probably think about the most because, you know, in some ways like Berachain culturally has overlap or elements with all of the above. I think ETH is just like a base plate, right? It's like it's very tough to not have competition in some sense with ETH. I think we're both very EVM aligned, and I think that I think it's exciting that Berachain is pretty much as close as you can get to the Ethereum L1, even more so than L2s or other L1s for that matter. But I do think that to some extent they have to be competition because we're all fighting for liquidity, for users, and attempting to grow the pie. But along the way, the pie is also divided internally.
One important distinction between you guys and Solana is that you have that reallocation mechanism back to the apps and the users. And I think especially recently, that's what Solana has really lacked. You know, you look at how extractive meme coins and pump fun is. I mean, all the revenue, they don't, you know, they're making ton, great for pump fun, you know, their closed loop of team, but none of that gets you know, passed back to the ecosystem.
100%. And that goes both ways, right? I think some teams, including perhaps the pump fun team, haven't always been enamored with Solana's response to them. Because I'm sure you can see that weird push and pull. It's like, well, we brought so many users to you, but fuck you, you're taking money away from, like, you know what I mean? Like, you know, who's the bad guy here?
Or who has the most leverage in the situation, right?
Correct. And you know, I can probably touch on more of that kind of stuff in the future.
But it'll be interesting to see how it plays out.
I think that we'll see a lot more people playing the field and trying to find places where they're welcomed, if that makes sense.
Yeah. Well, Smokey, appreciate your time. I hope you have a great ETH Denver.
Of course, man.
You're always welcomed on the Rollup.
I will. I'll make it out another time, and I'll hopefully drag you guys on something at 𝗵𝗶𝗴𝗵.
Hell yeah, dude. Cheers, man.